We've got a big next 2 weeks in the stock market coming for all of you. First of all, this week, we've got more corporate earnings than we know what to do with. We'll hear from all of the mega cap companies, Apple, Amazon, Meta, Microsoft, Google. They'll all report their earnings this week. When they report their earnings, we'll see how bullish they are on their capital expenditures in the data center. That's primarily Microsoft, Amazon, and Google. If they report bullish spending heading into next year, that certainly is enough to probably drive some of these stocks even higher. From an earnings perspective from semiconductors, we'll get big reports from AMD on Tuesday, Intel on Thursday. Those are going to be big days. We'll give you a preview of what to expect when those companies report their earnings later this week. We'll go through Lam Research, which reported their earnings last week. We'll get you caught up to speed with all of the numbers, all the things that you need to know when it comes to that company. We'll also look at everything from a technical perspective as we head into a key earnings week. And then, as most of you know, the following week is the United States presidential election. So we've got a big 2 weeks coming in the stock market. Better not waste any time. Kick things off today with AMD, which over the past year has seen its shares rise by about 62%. The company reports their earnings on Tuesday. The expectations for AMD are for $6.71 billion in revenue. That would be about 16% growth year over year. High-end estimate is closer to about $7 billion. You'd like to see AMD come towards that. From an EPS perspective, sitting right at about 92 cents per share. That would be about 31% growth year over year. Consensus is pretty tight on that 92-cent mark. Now, what I've noticed with AMD is the expectations for the company from a revenue and an earnings perspective has kind of flattened out. Even on the earnings side, it's kind of trended down over the past several months. Really, since the beginning of the year, you really haven't had much change in outlook for AMD. So that's the upside for AMD. If you're holding AMD shares and you want to know if the shares are going to go up this week, well, they've got to prove that they can beat Wall Street expectations for the next several quarters. The next several quarters, at least on the revenue side, you're expecting relatively strong growth, 22% next quarter, and then you dip into the 30% growth for the following 2 quarters. So that's what Wall Street is expecting. If the company can guide above that, give expectations that it'll be even better than that, well, when we look at AMD technically, well, you're probably headed for a breakout above or at least close to the all-time highs that we set back in March, up here at about 225, 230. So that's the upside for AMD. When they report their earnings, there's a couple of key things that you're probably going to want to look for. It's first of all, the gross margins. Last quarter, they were at 49%. That was 3% higher than they were a previous period. You'd like to see a number north of 50 or at least maintaining that 49% kind of gross margins. The other thing that everybody is going to look at is this is actually towards the bottom of their financial reports, is you're actually going to want to come down here and look at the data center. That is obviously their fastest growing business. You see year over year, this was the previous quarter, 1.3 billion all the way up to 2.8 billion. It's also their most profitable business. Operating income coming in at $743 million. Really interesting to see the growth quarter over quarter. We know year over year it's going to be fantastic, but can they put up a number well north of $3 billion here? If they do, it'd be very bullish. On the client side, that'll give us an indication on maybe what potentially is in store for Intel, which we'll talk about here in a moment, but it is a relatively low margin, low profit business. As AMD, I think, is doing the wise thing as a keeping profits slim because they've got a competitor over at Intel that are on the rope. The embedded custom silicon business is also a big business from a profit perspective. The revenue is at 861, but the operating profit at 345. Those are the numbers that I'm going to be looking at right away when AMD reports their earnings again on Tuesday. Now, the other big report that we'll get from the semiconductor industry this week will be Intel. They'll report their earnings on Thursday, and it comes after a year of massive declines for Intel stock, down 31% over the past year, and year to date, my goodness, down nearly 55%. Can the company bounce back with a report that we know is not going to be good? In fact, Wall Street is teeing it up for Intel to have a bad quarter. That means if it's just a little bit less bad than expectations, well, that could increase Intel shares. Revenue is expected at just $13 billion. that would represent about 8% decline year over year on that revenue side. The high-end estimate is calling for 14.4. I think that's going to be a little bullish. On the earnings side, we are not going to make money for Intel in the quarter, minus 3 cents. So if this company can squeak out a little bit of a beat, they can break even on that EPS side. That would be enough, I think, to move the shares higher. And certainly on the revenue side, the company also gives forward guidance. We're expecting a number north of 13.7. If it's less than that, again, that would be a decline of about 11% year over year. Now, Wall Street is not expecting much here with Intel. And so here's the company's opportunity to actually, at the very least, meet expectations. And if they exceed them a little bit, that'll be enough to hold the shares at the very least where they are. Again, the expectations have fallen off the map. This gives you a graphical perspective. You can see it here with all these red numbers. This means that Wall Street has just reined in their expectations. This was once a star athlete that was crushing the semiconductor business. In fact, Intel was the largest semiconductor business at one time, and it actually wasn't that long ago they were the largest, but the expectations have been reined in. This is a tired athlete that many want to see be retired, and you see that Wall Street just continues to rein in the EPS estimates and the revenue estimates. At some point, this bar, you have to assume, this bar gets low enough that Intel has to cross it, and if they don't, my goodness, the shares could just continue to go lower. Every bit of information on Intel's financial report will be dissected. I will report a video or post a video on Thursday. That'll likely go to the main channel. We'll also talk about it next weekend as well. We're looking for an operating loss that maybe is slightly better than the previous quarter. We're also looking at these restructuring charges. We're looking to see how the operating expenses and R&D and marketing, how those trend quarter over quarter, year over year. They're obviously in cost-cutting mode over at Intel. We'll also take a look at the gross margins, which have basically completely evaporated. Further down, we'll take a look at the balance sheet, which was in complete disarray the last time we looked at it. Yes, they have some cash on the balance sheet, but it's balanced off by a hefty amount of debt. We'll also look at operating cash flows as well. The company is just marginally profitable from an operating cash flow perspective. That could potentially slip negative in the most recent read when they give us kind of a 9-month read. We're going to look at additions to property, plant, and equipment as they are trying to compete somehow with Taiwan Semiconductor, which has a far better financial position than this company. They would be wise to completely suspend any type of financing activities other than maybe borrowing more money. Now, from the product side, we're looking for the client computing group, which again, when AMD reports their earnings on Tuesday, we'll get maybe a little window if there's any strength there. In fact, Intel will probably move one way or another depending on how Intel reports. And we'll see here, can this business continue to hold up? We'll look at the foundry business that everybody keeps thinking is going to save this company, and we'll see the losses probably continue to mount in that business. We'll look at Altera. That business is on the block. Last quarter, it actually lost money, and it had rapidly declining revenues. We'll see if the company is able to turn that around, because if they are, well, maybe a company will come and buy it, and that'll shore up the balance sheet maybe just a little bit for Intel. Again, Intel reports their earnings on Thursday. Now, the granddaddy of them all is not having any problems. Nvidia's seen its shares ride over 238%. In fact, it caught Apple this week as the most valuable company, not the most valuable semiconductor company, the most valuable company in the world, topping a multi-trillion-dollar valuation, close to $3.5 trillion. Now, part of that has to do with the fact that a key supplier of theirs, SK Hynix, has a product of theirs, which is high bandwidth memory, appear basically on every NVIDIA GPU that is finding its way into a data center. And SK Hynix, when they reported their earnings, noted that they had, Seeking Alpha says solid growth. I would say probably a little bit better than that. They said 70% growth in HBM shipments. That is not year over year. That is actually quarter over quarter. Guys, quarter over quarter growth of 70% is not solid growth. This is growth that you absolutely just wake up and have a dream and pray will happen. So this company delivered, and HBM growth year over year up 330%. So if SK Hynix is seeing 70% growth in HBM quarter over quarter, 330% year over year. Again, the HBM goes next to every single NVIDIA GPU. Well, if their business is soaring like that, well, you can imagine probably where NVIDIA is heading, and that is why shareholders continue to bid it up. Now, several weeks ago, maybe more than a month ago at this point, I brought to you a story that was kind of under the radar, wasn't out in the mainstream media. I have very good sources in the semiconductor business, and I said, hey, Blackwell was delayed. And I got many comments saying I was spreading FUD and I didn't know what I was talking about. Well, no, I actually did. NVIDIA's CEO actually confirmed this week that the flaw has been fixed and it was 100% NVIDIA's fault. We don't know if that's actually true or not, but the flaw is now fixed. We're in full production mode with Blackwell. I see no problems. In fact, customers are already running them, including Google, Microsoft, and several others. And by all accounts, it is a sensational product. Now, under the radar headline came this week from ARM Holdings, which really don't report their earnings for another month or two. But over the past year, ARM Holdings has actually almost outperformed NVIDIA, up 190% year to date. This bad boy's up 91%, but Qualcomm got a notice this week from ARM that could be troublesome for Qualcomm, although this will likely be battled out in court. So what happens is ARM, if you don't understand ARM's business models, they don't really manufacture anything. They have a chip design set, which they call ARM. There's probably a fancy technical term that they call it, but they basically license this out, and this goes into Apple's phones. It goes into any Android phone. It goes basically any smartphone runs on some kind of ARM instruction set, very similar to most PCs run, or at least Windows-based PCs run on x86, which is controlled by Intel and AMD. ARM has an instruction set which is low power, low heat, highly efficient, and that's why it goes into cell phones, which operate more or less on a battery. Well, now Qualcomm has one of these licenses, and they've been using it for one of their Snapdragon processors. Well, just recently, Qualcomm acquired a company that also has a license with ARM. And so what Qualcomm is trying to do is they're trying to use this new company, which I think is called Nvidia. They're taking that company's design and license with ARM, and they're going to roll that into Qualcomm's Snapdragon chip, basically transferring the license that the acquiring company that they had, they're transferring the license that they had with ARM onto their technology. ARM saying that is a breach of contract, and in fact, they gave a very, very quick 60-day cancellation notice to Qualcomm, which is not only a long-term partner of ARM, but also one of its biggest customers. And so we'll see what happens here. My guess is this is a negotiation tactic by ARM. They basically give this 60-day notice to Qualcomm. Qualcomm realizes that its hands are tied and they have to go back to the negotiation with ARM and work something out. My guess is both of these companies will work something out, but Qualcomm shares traded down by about 4.7% on this news, because if ARM does pull away this license, well, it puts Qualcomm in a tough spot. Part of this speaks to the defensible moat around ARM's business. If Qualcomm comes back to the table here, well, ARM certainly can make its case that it's got a big moat around its business. And I think most investors are waking up to that, considering the shares are up so much. Now, ASML obviously reported their earnings, I believe it was last week or the week before. Year to date, shares haven't performed well, down about 6%. Now, we have those big elections just a week or so away, and the ASML CEO is not bullish on who gets into the White House, reducing those export pressures that come from the country of China. As you guys know, there are a lot of export restrictions. They started during the first Trump presidency, and they've been amplified and actually increased and ratcheted much, much higher during the current administration under President Joe Biden. And so ASML CEO says that it doesn't matter who wins in a week or so, that they expect those export pressures to remain, which will keep a lid more or less on ASML's business. Now, speaking of China, we'll talk about that here in a moment, but we've got Lam Research reported their earnings this week. Over the past year, shares are up about 33%. Year to date, though, they've basically gone nowhere. Don't got a massive valuation on Lam Research, just trading at 21 times forward. You get a little bit of a dividend yield. We'll show that to you when we get to cash flows, paying over about 1%. The company reported their Q1 earnings earlier this week. Revenue came in at $4.17 billion. That was about 20% growth year over year. Beat expectations as well. We also got Q2 guidance coming in at about $4.3 billion. The expectations, I think, was closer to about 4.2. EPS guidance coming in at 87 cents. The consensus was 85. And again, these companies tend to beat by maybe a couple $100 million and by a couple cents. And so you got to imagine that Lam Research will come a little bit over and above. Now, here's the thing about Lam Research, and one of the reasons why it probably trades at a relatively affordable valuation is when you look at their geographic distribution of their revenue in the most recent quarter. Well, there it is. China right at the top, 37%. So one way to look at it is the export restrictions that were put into place over the past two presidential administrations here in the United States hasn't completely dampened this, but the risk obviously is if we get a ratcheting up in tensions between the United States and China, no matter who wins in a week or so, well, that certainly could impact Lam Research. In that case, if I were to have a position in Lam Research, number one, would have a stop loss somewhere underneath the shares, and number two, probably wouldn't be completely overweight this name, only because there is that risk out there. Now, another reason why I wouldn't be overly overweight this name, like I wouldn't have more of Lam Research shares than certainly Nvidia, probably even ARM Holdings, which we took a look at this week, maybe even Qualcomm, which finds himself in a bind with ARM Research, AMD as well. There's many semiconductor stocks that I would rather own a much larger position than this company, but these financials are fantastic. $3.5 billion last year in terms of revenue. We talked about $4.2 billion this year. A lot of it flows down into your gross margin. In fact, just over $2 billion, about $1.7 billion last year. They were able to maintain their gross margins. In fact, increase them just fractionally over the past year. Research development, selling, and general administrative grew about as you would expect. Operating income came in at about $1.3 billion. That was about $300 million more than it was a year ago, actually closer to about $250 million. Net income ticked over $1.1 billion. It was just under $900 million last year. So things are looking really good from a balance sheet perspective. They've got plenty of cash. They have some inventory. They've got some long-term debt, but nothing to be overly concerned about from a cash flow perspective. So when you see these companies where it's like they've just got these steady results, things look really good here, they're churning out net income, nothing overly exciting there. From a balance sheet perspective, there's no liability that's sitting here that they have to address. So when you come to cash flow, you're like, well, what is this company doing with their cash? And you probably can guess. They had $1.6 billion worth of operating cash flow. That's much more than last year. In fact, like 60% more, where they were sitting at about $1 billion, under $1 billion. They don't have a ton of capital expenditures. So this is the beauty of their business model. So what do they do with all this operating cash flow? Well, here you go. They're buying back the stock, nearly $1 billion. This is just a quarter. Wow, just a quarter. They bought back $1 billion in stock, and they paid $260 million in dividends. And so this is one of the reasons why you do own a stock like this. Yes, you do have some geographic risk, but that's probably the case with all these semiconductor stocks. I tell you what, you get a very heated conflict between China, Taiwan, United States. I mean, all these stocks are going to take a massive dump. But you don't have a big valuation on this one. And unlike some of these companies that are buying back their stocks at like these all-time highs and these like nosebleed valuations, these guys are buying it back at a reasonable valuation. And so I tell you what, that is what you're buying the stock for. As long as they continue to churn out this operating cash flow, they'll buy back tons of the shares. And at the very least, when you look at things over maybe year to date, it's not that great, but you stretch it out to 1 year, you're up 33% on this one. You stretch it out to 5 years, you're up 187%. You stretch this thing out to 10 years, you're up 1,000%. Okay. So it's not going to be like Nvidia that's up 1,000% over like 2 years. But over a long period of time, as long as you don't get any major tensions, but again, that affects the rest of this industry, well, this stock will continue to perform. Beautiful company, doing a great job. Now, Let's jump over to the technical segment. We've got the SOXX, the socks. Put your socks on, guys. And this one's looking good. It's obviously heading into a very key week when it comes to earnings. We'll see how this one reacts. You actually could buy this one. It's hovering over above an area where if it finds footing here, you'll find your way back to the middle of the channel. That's to like 250-ish. And then if you make a new higher high on this one, maybe we won't go all the way to the top, but you're coming up here to 270 on this one. So you still got 40, maybe $50 in upside there. The SMH, slightly different scenario. They're overly concentrated in Nvidia. I believe Broadcom as well, which are both trading near tops of the range. But if this one to make a new higher high, which it could potentially do over the next couple of weeks, you'd retest up into the $300 range. Nvidia is looking absolutely beautiful. We finally confirmed a new higher high this week. This one is continuing to trend and walk its way upward. Needless to say, dips in Nvidia can be bought. Now, AMD, like we said, reports their earnings just a couple of days from now, actually on Tuesday. And what you'd like to see with AMD is it's made a series of lower highs more recently, but it hasn't confirmed it with lower lows. So you're still very much in this uptrend, which is represented more or less by this purple line. Now, even if we break below this purple line, you will say, yes, this purple trend, this kind of breakneck trend is over, but you still have to stretch this out and then kind of identify maybe a longer term trend. So with AMD, if we get disappointing results, as long as the outlook and maybe some other things look good, we could get some buying opportunities. I don't know if we'll come all the way down here into the 130s, even lower than that, the 120s, even like the 140s on this one could create kind of a buying opportunity considering the longer term trend is still very much intact. If you break to the upside on this one, you're almost guaranteed to retest right around $230. That's where you could take some profits if you feel like it. Broadcom, just on a breakneck pace. This company doesn't report their earnings till December, but they will move in sympathy a little bit based on what AMD, Nvidia, and some of these other companies do over the next couple of weeks. This company obviously has a much longer term trend, which will represent by this kind of weekly chart. I mean, this thing is basically straight up in the air for the past decade, and it's straight up in the air over the past 2 years. When it breaks this trend is when you get excited because you really need to step in there and buy. Now, like we said, Intel reports their earnings on Thursday. You should have support, I guess, somewhere down here in the $18, $20 range, just in case the company bricks. But it depends on how bad Intel bricks. If they brick, this one could get really ugly. So I'd be inclined to recommend anybody that has kind of played the short-term bounce, maybe locked in 15, 20% gains on this one. They bought the quote-unquote dip or caught the falling knife and it had a bounce. I'd be inclined to at the very least, peel off a couple of shares, realize some profits, because if this one bricks, it could get really ugly. Now, again, the bar, though, with Intel is so low. Like, this company could literally trip 4 times before its earnings report, and investors still might find some reason to give it a pass. You should have overhead resistance, though, this one in the $26, $27, $28, $29, $30 range. There's a lot of investors that just want to get out of this stock. So even if this one has a little bit of a recovery, I think it's going to be kind of a slow churn higher because there's a lot of people that just feel burned by that as they watch the rest of the semiconductor industry basically skyrocket. Now, Qualcomm, again, getting their ARM license pulled, but I think investors are correctly realizing that's more of a negotiation ploy than maybe a reality, although if it turns into a reality, we'll probably test areas lower with Qualcomm. Let me shift us back to a daily view just to see when we report. We actually report the day after the election, so you get Wednesday, November 6th on this one, and we'll see where we'll preview Qualcomm's earnings on next week's show. TSM just confirmed a new higher high. This one could continue to run. Certainly AMD and Intel could give this one the airspace to continue to run all the way to the top of the channel, get into the 230s. If it doesn't, well, we're looking for buying opportunities somewhere back into the 170s, 160s. ASML is getting close to a buying opportunity. Wouldn't blame anybody if they want to step in here. Again, we're underneath the middle of the channels. If you're kind of new to the channel or new to the YouTube, well, we set up these channels on these long-term stocks. Okay, this channel has been intact for 20 years. with ASML. And if you think this channel is all of a sudden going to get broken down and ASML is just going to put up these gigantic red candles, well, at some point you might be right, but if you can predict that right now, then you're a better investor than I am. I'm going to assume this 20-year channel is just going to continue to hold. What we do is we put dark green lines on the bottom because this is your time to buy. We put light green lines in the middle because that is a time where if you want to buy, you can buy. And we put red at the top, certainly not an area where you buy shares. And it's absolutely a time where you can take profits. When you're underneath the light green channel line, you can actually start buying, and ASML is there. NXP, let's see when NXP reports their earnings. It's a company we talk about every week, but they don't make a ton of news. We'll get earnings from them next week or the following week on Monday, November 4th. So we'll talk about them more in depth when they report those earnings. ARM Holdings, I was hoping it would hold this trend. I think this trend is still intact. You always got to move the line around, have it fit your narrative, right? You get earnings from ARM on Wednesday the 6th. You'd like to see them work out their squabbles with Qualcomm before that. This company's in a beautiful kind of shorter term trend, even the longer term trend, which is longer term trend. This company's only been public for about a year and a half now, or excuse me, not even a year. Long term trend, intermediate trend, everything looks good here. You'd like to see this one move to a new higher high, which would take you back up over the near $200 per share. So if it does that, you still got a long ways to go. SMCI, I didn't hear much from them, and it's probably because they have earnings as well. Sorry, I missed this one. Although, given the fact that they haven't released their 10Q or their 10K annual report, it's hard really to believe anything that comes out of this company's mouth. But we'll hear from them on Tuesday, October 29th. So people that are holding this stock, you've got a better stomach medicine than I do. I would not be able to own a stock like this. Now, we have broken out, at least temporarily, from this downtrend. I keep the lines on because typically what happens is you maybe do a back test at the top of the channel, and then hopefully for people that are bullish to the stock, you kind of bounce here and then you make kind of a resumption of this trend that could be materializing. But again, the company has not released or produced an annual report. They're going to produce, we suppose, a quarterly report, and we'll see how things go. SMCI probably implying a big move lower should take you into this consolidation pattern down here at 25.26. Higher, there's overhead resistance up here in the 70s. Your risk reward is basically equal on this one. And obviously we'll be back here next week and talk about this. I'll probably post a video on the main channel when it comes to SMCI. Dell Computer, we don't get them until later in November. This thing still looks absolutely sensational. Micron, they just reported earnings, so we won't get earnings from them again until December, but that SK Hynix news was probably bullish for this company. I think this one continues to walk up, probably makes a new higher high up here in the 140. So you still got decent upside if you want to play the trade. You got your stop loss down here at 84. You got your upside and your sell zone up here at 160. Lam Research reported their earnings this week. Here we are, right on kind of a light green line. Again, you should be able to read these charts for yourself. They're very self-explanatory. Anytime you're at this dark green line, that is a heavy buying opportunity. Light green lines you can be like Salt Bay and just sprinkle a couple of shares. When you get up to the red line, you're pretty much ignoring it, other than some situations. I have bought in Nvidia more recently close to the red line. Now, Applied Materials hovering on what we call kind of the light buying area. Maybe I have to come up with a better term for that, but we'll get earnings from them 2 weeks from now on Thursday, November 14th. So we've got big earnings season coming. We obviously hear from the mega cap companies, and we'll hear from Intel. We'll hear from AMD. We'll hear from Supermicro, allegedly, this week as well. It'll be an entertaining week. You're going to want to put down your phone, tell your wife and kids that you're going to have to devote a little bit of time to the stock market this week, because these are the weeks where you want to pay attention. And then obviously we've got the elections and the rest of the year that will follow. And I tell you what, these next 2 weeks will likely be critical for the entire stock market. I'll be back next week to bring you all the news. I'll also be back tomorrow. I'm working on a Tesla video, so if you're a fan of Tesla, I'll have a video for you posted tomorrow here on the channel. Thanks for tuning in today. Have a safe and fun week next week watching all of these earnings. And again, I'll be back next week to cover them for you. Good luck with your investments.